Welcome everyone to Vested Interest. This is Shane back again for another Stock Pick of the Day video. It is September 16th. On today's video, we are going to take a look at one out of the information technology sector, Vishay Intertechnologies. Now, before we get too far into the video, if you could do me a huge favor, hit that thumbs up button down below if you find any value in the content. Make sure you are subscribed to the channel. Join us on this journey to financial freedom. Join the Vested Interest community. Click the notification bell down below so you are notified whenever we put out any new content. We put out these videos Monday through Thursday, this Stock Pick of the Day series. I also do suggestions from viewers and subscribers. So if you have a company like this one you'd like me to cover in the Stock Pick of the Day series, go ahead and drop it down below and I'll try to work it in the rotation. And a special thank you to all the subscribers out there. Really do appreciate you. The channel continues to grow because of people like you. And if you are watching the videos, one of the other things that the YouTube algorithm looks at is watch time. So if you could watch the videos to the end or a little bit more than you normally do, that would really help out as well. And again, thank you to everyone who's taken the time to do that. I really do appreciate it. Now, this is the Vested Interest Stock Screener. This will be how we are going to go through the video here. We will look at this different criteria. We'll check it out at the end where it shakes out, whether it's 5 of 8. If it was a financial company like a bank, which this is not, we'd add in price to book, and then it would be 6 of 9. Just because it meets this screener, makes 5 of 8, 7 of 8, 8 of 8, does not mean I'm investing. It means it goes onto my watch list, and I do more of a deep dive into the company. And sometimes they don't even make it onto my watch list. If I have enough already, which I currently do, I think I have enough already on my watch list, then it doesn't even make it there, and maybe I just pin it for a future date where I'll check up on it. But I don't want a watch list of 100 stocks. That doesn't make much sense. I look at maybe 10, 15 stocks, and then I even whittle it down from there to figure out which ones I'm looking to buy in the near future. Now back to Vishay here. You can check them out on their webpage, www.vishay.com. Excuse me, that's www.vishay.com. That is their homepage where I pulled this information from. For 6 decades, we've been building the DNA of tech, right? They are a tech company. The Vishay journey began with one man, Dr. Felix Zandman, and a revolutionary technology. From there, we would grow and strengthen over decades, arriving where we are today, one of the world's most trusted manufacturers of electronic components. And that is their bread and butter, from discrete semiconductors to passive components, from the smallest diode to the most powerful capacitor. Vishay's breadth of products is the very foundation that brings modern technology to life every day for everyone. We call it the DNA of tech. You can read through the rest of this, but they really have their hands in making those circuit boards for computers, circuit boards for electronics. They're just an electronics and manufacture, like I said, diodes, semiconductors, that sort of thing, electronic components overall. That is really their bread and butter here. They do have their hand in the chip manufacturing process as well. You can see here, R&D, manufacturing, engineering, quality, sales, and marketing would generate the essential components that enable inventors and innovators to create new generations of products, ones that span many sectors: automotive, industrials, consumers, computers, telecommunications, military, aerospace, and medical are the different sectors that they are involved in. Now, the reason we're taking a look at them, down 0.54% on the day. We are talking about Vishay Intertechnology Inc., ticker VSH, again, out of the information technology sector. Close out the day at $18.32. Looks like they're flat as of when I pulled this information in the after hours. 52-week range as low as $17.42, as high as $25.32. So they are pretty close to their 52-week high. Market cap of $2.506 billion, so a small cap company here. Beta of 1.1, so they are just slightly more volatile than the overall market. PE not terrible at 14.89. EPS at $1.23 per share. Earnings date is coming up sometime between November 6th through November 11th. So if you're interested in earnings calls, go ahead and check them out between that little window there. Forward dividend is 40 cents. I believe they're a quarterly payer. We'll see that here towards the end of the video with a starting dividend yield of 2.17%. Ex-dividend date is September 10th. So we just passed that, right, 6 days ago, and they are going, so you would not be in line for this payout on the 26th. You'd have to wait for the following if you were to buy them now. And they have a 1-year target, at least according to Yahoo Finance, where I pulled this information from, at $22 per share. So they see some upside as far as price appreciation, but not quite back to their 52-week high. Let's jump over to the right. We're going to check out dividend yield theory to see if this one is potentially undervalued. To do that, we look at their 5-year dividend yield average of 1.89%. We compare it to the current 2.17%, or over here where it says forward annual dividend, same number, 2.17%. And since this is higher than their 5-year average, that speaks to undervaluation. Low payout ratio, I like under 75%. They're sitting at 32.52. So very low payout ratio on this one. Lots of room to increase that dividend over time, as well as pay down debt, make acquisitions, do whatever they need to. They have plenty of room there. They're only paying out 32% of their free cash flow, so the rest of that free cash flow is free to do the other things there. Buy back shares, that sort of thing. Now we're going to jump down to free cash flow because we want growing free cash flow over time, because typically if a company has growing free cash flow, they have growing dividends to match. 2021, you can see here $238 million in free cash flow. Dropped down in 2022 to $158 million. 2023 further dropped down to $36 million. And in the trailing 12 months, they are actually negative $143 million. This is not the way we want to see free cash flow going. It would just be the opposite. If this was 143 back here, 36 million to 158 million to 238, that is the way we want to see it going. It is going in the wrong direction. They are repurchasing some shares here, though I am questioning why they're doing that if free cash flow is in the negative. Now, I always recommend more than one source. Another one that I like is stockanalysis.com. You pick any sources that you like. I'm not affiliated with stockanalysis.com or Yahoo Finance, just two sources where I go to for information. There are only two analysts that taken a look at this. They both call it a buy. This was last updated August 8th, so it is a little over a month old right now. They do have a low estimate. The whopping two analysts that they have looked at it have a $22 low estimate, which would be a 20.09% increase from where it currently sits. Average estimate of $23.50 per share. That would be a 28.28% increase from where it currently sits, which is pretty close to what we saw with Yahoo Finance on the previous page. And a high estimate of $25. That would be a 36.46% increase from where it currently sits. And all the while, you could collect that 2% dividend yield. Now, I like to look at statistics here and look at return on equity and return on invested capital to see how well a company is reinvesting its capital back into itself. And I like 10% or better for these metrics, and it's not quite there. Return on equity sitting at 7.88%, lower than I like. Return on invested capital even lower at 5.41%. Don't like that. Needs to be above 10% for me. EPS growth is not listed. Don't like that either. Neither is revenue growth. So not liking the overall numbers on this one, other than it's close to a 52-week low. So let's look at the dividend history as we wrap this one up. Quarterly payout ratio, again, very low, 32.54. No dividend growth. Actually, when I looked back further in time, it actually looked like they may have cut the dividend in the past and have just kept it steady since 2022 at least. I believe it was actually further back than that. Their buyback yield is positive at 2.05%, so they are buying back shares at an opportune time, and the shareholder yield is positive at 4.26%. Now, again, going all the way back to March 2022, they've been paying 10 cents per share. That's where they continue to be. I believe it was even further back that, and then even if you go back far enough, there was a dividend cut, if I remember correctly. They do pay out on the March, June, September, December timeframe, just like most companies do. Now let's kind of wrap this one up here. Look back at the screener, see how this one shakes out. Understand the business. That's where we started, right? They are a manufacturer of electronic components. That's what they do. Growing free cash flow? No, just the opposite. Decreasing free cash flow, and I don't like it. Growing dividend? No. It's been paused at least since 2022. Dividend payout ratio, much lower than 75%. That's a check there. Dividend yield theory says it's potentially undervalued. Check there. 15% of a 52-week low, yes, check there. Return on invested capital and return on equity, both under 10%, no check. And the industry average or greater than 5% earnings per share growth doesn't meet either. So no check there. So we're looking at 1, 2, 3, 4. It does not make the 5 of 8 necessary to make it onto my watch list. Let me know what you think of this one. It does seem to be an interesting company, but the metrics of Vishay just are not quite where I want them to be. So this one doesn't make the cut, at least for me. Let me know what you think in the comment section down below. And as always, appreciate you stopping by. If you haven't done so already, don't forget to show me some love. Hit that thumbs up, ring the notification bell. Most importantly, subscribe to the channel. Join us on this journey to financial freedom. Join the vested interest community. I do read and respond to the comments myself. I am always interested to read your questions, opinions, or suggestions for future topics. So again, if you have a company like Vishay you'd like me to cover in the Stock Pick of the Day series in the future, go ahead and drop it in the comment section down below. Let me know what you think of Vishay. Let me know what you think of the videos. And I will see you in the next one. This is Shane signing off, wishing peace and prosperity to you and yours. And remember, financial security comes to those who take a vested interest. Hey, thank you for stopping by. Thank you for tuning in, and we will see you in the next one. I'm not a financial advisor. Nothing in this presentation should be considered financial advice. I'm only sharing my opinion and investing in journey for educational and entertainment purposes. Investing involves risk. You can lose money and should never invest any amount you're not comfortable losing. Always do your own research. Invest based on your situation, circumstances, and selected criteria, or seek the advice and counsel of a certified financial advisor.